of 186 rupees per share. The IPO is opening on 15th of October and closing on 17th of October. The anchor allocations will be announced on October 14th. We are truly confident that this IPO will be hugely successful with your support. With this, I would like to now invite Mr. Ansu Kim to share some of the key highlights of the company. Thank you.
Namaste. A very good afternoon, and thank you for attending the meeting today. My name is Ansu Kim, the Managing Director of Hyundai Motor India Limited. Today, I am very excited to share Hyundai Motor India's unique story. I hope you find today's meeting as an opportunity to develop a deeper understanding of our company and our values. I will start with Hyundai Motor India's vision and parentage, the root of our journey and what made all of this happen. Then we will walk you through the key pillars of why we have the right to win continuously, including our future readiness in India, the most exciting auto market in the world. Lastly, we will touch upon our key financial highlights and the robust governance standards. Hyundai Motor Group has established unparalleled leadership in the global auto market. HMG has an iconic position as a global top 3 OEM with a brand value exceeding $20 billion. Also, our scale reached a presence in over 190 countries. This remarkable success is backed by our group's robust R&D capabilities. HMG has established a centralized R&D hub that drives global initiatives with investment surpassing $26 billion since 2014. With our vision of a prosperous humanity, we, HMI, benefit from HMC's extensive global ecosystem, which gives us a strategic and competitive edge against our competitors. HMC's early access to trending technology, supported by profound R&D capabilities, enable us to bring industry-leading features to the market in a short period of time. And our powerful Hyundai Motor brand provides us with exceptional global recognition and lineage that set us apart in the industry. Moreover, HMC's global platform offers doors to lucrative export opportunities, allowing us to expand into global markets and implement best practices to the Indian market. Our productive relationship with HMC is the key driver of our success and drive us to continue growth in the future. I will now hand over the presentation to Tarun.
India is not an easy market to crack, as is seen by very limited success global big automakers have achieved in India. However, Hyundai has successfully built the second largest auto franchise over more than 26 years of operations in India. We are an iconic brand with consistent double-digit market share. We're also the largest exporter on a cumulative basis since the last 2 decades. So we are actually a double engine growth, domestic as well as exports. We have a large local dealer network with 2,900 plus touch points spanning across the length and breadth of the country. We have automated and flexible manufacturing with 824,000 capacity across model and powertrains. And last but not the least, we are driving industry-leading margins and growth at scale, as is visible from revenue of INR 698 billion plus and EBITDA margin of 13% plus. HMI's right to win is built on 7 pillars. First, democratizing access through innovation. We have something for everyone. Second, we are an award-winning brand with a track record of leadership. Third, we have a win-win approach across stakeholders, which gives us long-term sustainability. Fourth, we have a flexible, localized and automated manufacturing, which makes us more agile to respond to any market challenge. Fifth, while we are doing well today, we're also innovating consistently in processes, digitization, customer experiences, and technologies so as to be future ready. Sixth, we have been delivering growth at scale with industry-leading profitability and returns. And last but not the least, we have a highly experienced leadership team and independent directors. We are pioneers of introducing innovative features, promptly identifying trends on the back of our global experience and extremely strong local research. We have never accepted status quo right from the time we set foot in India when we introduced India's first tall boy design car, Santro. This design was primarily made keeping in mind the sari worn by many Indian women so that the crease will not be affected while entering or exiting the car. Then in 2002, we introduced CRDI diesel engine, which was much quieter, fuel efficient, and smoother than the conventional diesel engines that were prevalent in India at that time. Creta was indeed a game changer, which propelled India's SUV market and is still leading this segment with 30% market share. Introduction of ADAS raised the safety bar several notches up, and the Ioniq 5, with its unique V2L features, raised the bar for EVs in India. India is many countries in one, and Hyundai has a car for every Indian. We have a balanced portfolio of hatches, sedans, and SUVs, and of course, much higher than industry contribution of 65% plus from SUVs, which gives us better image as well as margins. Another extremely important aspect of HMI operations is the wide range of powertrain options that we offer to our customers. Customer preference in India vary hugely from state to state. For example, diesel is very popular in Punjab, Andhra Pradesh and Telangana, whereas petrol is popular in Delhi and Northeast, and CNG is popular in UP and Maharashtra. Presence of all three fuel options in our portfolio allows us to target all states well. Similarly, we have 1 manual and 4 automatic transmission options that again helps us to cater to preferences of Kerala and Mumbai customers who want more automatics, and say Rajasthan and UP customers who want more manual. HMI has a consistently award-winning lineup. Case in point is, we are the only OEM to win 8 ICOTY, India Car of the Year awards, which is an equivalent to an Oscar. Also this year was very unique when 3 of our different products, Exter, Verna and Ioniq 5, won Car of the Year award from different publications, again showing the depth of our product lineup. HMI has been consistently top 2 player despite multiple domestic and global OEMs entering the market. We are a multi-model brand with leadership, especially across premium category like Creta in the mid-SUV segment. We have a strong understanding of the Indian consumer and an ability to continuously innovate and deliver. We have been an export leader for over 2 decades with balanced exposure across emerging markets, as is seen in the pie chart on the bottom right. This assumes significance in the light of the continuous geopolitical risks in the global markets. This slide is very close to my heart. Our mantra is success of all stakeholders, and we believe strongly in a win-win approach. Starting with customers, we give them a high-quality 360-degree ownership experience across sales, service, finance, insurance, and Hyundai Promise across their entire car-owning life cycle. Under community benefits, we have a unique initiative called Samarth, wherein we are focusing on inclusivity for disabled in India. We engage our dealers through many programs like dealer conferences and other KPI-driven initiatives. Also, we have a special program designed for dealers next generation so that they remain engaged to us and join their parents' Hyundai business. Last but not the least stakeholder is our employees with our best-in-class and award-winning HR practices. We take pride in our strong dealer network spread across 1,000+ cities, which consistently provides high-quality service to our customers, resulting in NPS score of 91%+. Our focus on digitization is class-leading with initiatives like My Hyundai app for the customers and S-Smart app for dealer manpower, which makes them more efficient and smart. All these initiatives have led us to becoming one of the top 3 in dealer satisfaction as per the study conducted by FADA, India's Automobile Dealer Association body. In fact, our score of 834 is 49 points more than the industry average. Over to you, Gopal.
Let me give you an overview of our Chennai manufacturing plant. This 540-acre state-of-the-art facility is the largest integrated single-location passenger vehicle plant in India. Our common platform architecture gives us flexibility in operations. This also ensures cost efficiency by driving margins and returns. At the same time, reducing the time to market the new products. Specifically, in our global body build line, the body welding shop helps us in quickly establishing the new models. Our current capacity is 824,000 units. We make 13 car models, 7 types of engines, and 64 types of transmissions in 13 manufacturing shops. We have a very calculated and calibrated approach in expanding our capacity to capitalize the increased demand in the market. Currently, we have the capacity of 824,000 units. Recently, we have acquired the Pune plant, which will increase our capacity to just under 1 million units by second half of CY 2025. When the phase 2 is implemented, our capacity will reach nearly 1.1 million units. We will also make the Pune plant as one of the highly automated and state-of-the-art plants while maintaining a healthy, balanced mix of domestic and export. We will sustain the capacity utilization above 90%. Now let me give some highlights about our Chennai plant. We have one of the highly automated auto manufacturing plants, which is producing 130 units an hour. We have extensively benefited due to Hyundai global quality management systems, which ensures the build quality of cars to the world-class level. We are, of course, leveraging advanced digital manufacturing solutions, technologies like virtual reality, deep learning, vision systems in maintenance, quality, supply chain functions to improve our competencies and efficiencies. For example, we got a dedicated IoT network. These efforts have fetched us to get the Smart Factory of the Year award from Frost & Sullivan for 3 consecutive years. Over to you, Tarun.
HMI is future ready. There are 6 vectors to our growth strategy. Portfolio expansion. We leverage HMC's R&D to consistently launch new passenger vehicles across powertrains. We shall do the same in future as well. Our premiumization strategy is focused on selling higher trims and further bolster our SUV presence. In fact, our higher trim contribution has increased from 16% in 2019 to 25% in 2024. High increases in penetration are also seen across automatics, sunroofs, and connected cars. We have a calibrated expansion and are looking to reach 1 million plus capacity with the addition of the Pune plant. Our EV roadmap is robust with the launch of Creta EV in Q4 25 and 3 more EVs in the midterm. We intend to become global manufacturing hub for HMC for emerging markets. We are further strengthening the global Hyundai brand locally in India through a slew of marketing initiatives. Globally, HMC is an extremely strong player in the EV market with a wide portfolio of EVs. Then some of you may wonder why we have only one EV in India. Let me take a moment to explain this. Our EV strategy in India is top-down. Launch of Kona in 2019 helped us to understand the EV customers, and then Ioniq 5 gave us a premium and high-tech brand image in the Indian customer's mind. Our future EV strategy is built on localization with battery pack assembly and other key parts, and of course collaboration with local and global vendors. Also, we will keep working on developing India's charging infrastructure. HMI is further expanding prominence within the HMC ecosystem and is core to HMC's global manufacturing plants. We are HMC's export hub and largest foreign production base in Asia. We are manufacturing and exporting cost-optimized models to emerging markets globally. And also we are exclusive manufacturers of models like Exter and Verna. I will now pass on the baton to my colleague Wang Do to take you through our robust financial parameters.
Thank you, Tarun. On our exceptional finance profile, I would first like to focus on our consistent growth along with the premiumization. We have achieved 13% CAGR growth in sales volume from 22 to 24. We have a balanced presence across all passenger vehicle categories, while SUV segment has mainly contributed to the growth. During the same period, our revenue achieved higher CAGR growth by 21%. Such outstanding growth has been led by our strategy toward premiumization, driving consistent growth in ASP, which has increased by 7% from 22 to 24. Furthermore, our strong export presence has provided a natural hedge effect, leading to increase and stabilization of our revenue streams. Next is our best-in-class margin and industry-leading ROCE. For us, continued cost leadership, profitability, ROCE are as important as volume growth. From financial year 22 to 24, EBITDA margin has grown to 13.1%, and net income margin increased to 8.5%, highlighting our strong focus on profitability. The enhanced profitability is driven by our approach toward shifting to higher margin products, including SUVs and also our operating excellence. Our return on capital employment has shown extraordinary growth from 20.4% to an industry-leading 62.9%, proving our successful investment strategies.
Thank you, Wang Do. As the final chapter of our presentation, I would like to elaborate on the people who are leading our story. Our exceptional performance is not coincidence. It is a direct result of our seasoned leadership having representation from India and from Korea. Especially, I would like to highlight our outstanding composition of independent directors, which is formed of prominent and exceptional Indian professionals. Our independent directors will bring a wealth of experience along with their expertise to oversee our activities and ensure that we maintain the highest standards of excellence. As we wrap up today's presentation, I would like to emphasize a few key points that prove our right to win. First of all, India is the most exciting market in the world, known for its large size, rapid growth, and increasing demand for premium offerings. Moreover, backed by HMC's ecosystem, we are well positioned to capitalize on the huge potential of the Indian automobile industry. Our sustainable business model is built for long-term success, ensuring that we can navigate the challenges and opportunities of the future with confidence. Also, our approach to growth and expansion has resulted in industry-leading margins and returns, solidifying our position as a top performer in the Indian markets. Finally, not only are we excelling in the present, but we are also well prepared for the future. Our future-ready orientation and ability to adapt to industry transformations make us uniquely positioned to seize the opportunities lying ahead. This concludes our presentation, and we hope you enjoyed our truly exciting story. Thank you so much for listening.
Thank you for your patient hearing. We commence the question and answer session right now. A few ground rules. We would request every member of the Honorable Media Fraternity to identify themselves and the media house before asking the question. And secondly, in round one, we will have only one question per journalist. So with this, we can commence. I think we have a question there.
Hello. Hello. Hi, over here. Sir, your reserves and surplus fell in FY24 by half, I mean almost 50%. So was it only because of the dividend you gave, or was there any other reason?
When it comes to our profitability, first of all, Richard, I would like to focus on our historical profit. Actually, HMI has a good margin. There are some reasons why HMI has good margin. The first, we have continuously increased our ASP through our premiumization strategy. The second, we imported the mix by building a strong SUV lineup for each category. The third, HMI has historically have a very, very strong experience for our cost optimization through localization, value engineering, value analysis. It's very helpful to keep our margin. Last but not least, we are able to reduce the fixed cost by maintaining a higher utilization through flexible the volume management between domestic and export. That's why we already record a very good margin. And going forward, we maintain our current level margin through those very strong points.
Sorry, sir, would you like to talk about the total equity? My question was about total equity, which fell in FY24 because of the reserves and surplus.
Yeah, actually that is because of the dividend. So what we have declared. Otherwise, you could have seen the profit what we have earned from financial year 23 to 24. It has more. So because of the dividend what we have declared, only the retained earnings have come down.
Thank you.
Good afternoon. I'm Geetanjali Kedia from SP Tulsian Investment Advisors. Sticking to the dividend point, FY24 dividend doubled year on year. And on the other hand, company has committed investments of 25,000 to 30,000 crores going forward. So these two appear contradictory. Can you throw some light on company's dividend policy and the investment commitment? Thank you.
배당과 관련해서 여쭤보겠습니다. 24년 그 피스컬 이어를 봤을 때는 전년 대비해서 배당이 2배나 증가한 모습을 보이고 있는데요. 그것과 반해서 투자비는 2만 5천에서 3만 크로까지 투자비 계획을 발표를 하고 있습니다. 이같이 상충되는 모습에 대해서 설명을 좀 부탁드리겠습니다.
Actually, HMI consistently paid our dividend. The last time the dividend, just compared to the previous year, actually the last look like the one-time dividend is very high, because during the COVID period we didn't pay our dividend. That's why the financial year 25 our dividend already a bit higher than previous. And regarding the dividend, after IPO, we will declare our dividend policy. At that time, we will consider every factor, such as the dividend pattern, earnings, and the future capex plan, and the cash flow also. Definitely, we will try to industry best practice also.
Hello, sir. I am Dilip Dauda from Chittorgarh.com. I just want to ask you one question. Once your expansion plans in place, what will be your revenue mix going forward, domestic or export?
네, 향후 증설 계획을 가지고 계신데요. 이처럼 그 생산을 확장하는 데 있어서 향후에 그 매출액이 내수와 수출 비중 간에 어떻게 나뉘게 될지 그 매출액 믹스에 대해서 말씀 부탁드리겠습니다.
So if you see currently we have a very healthy domestic to export mix. In fact, right from the time we came to India, we have been very, very focused on exports. So today on a volume basis, it is 80-20. On a revenue basis, it is 77-23. Of course, we are the hub for the emerging markets like Middle East, Latin America, South America, Asia, Africa. So it depends on, of course, the economies and all. But we believe this 80-20 mix is a kind of an ideal mix. And now with the addition of the Pune plant, we will have more capacity and more headroom as well. So we will look at increasing both domestic as well as export volumes.
Hello, I am Mehul Dani from FinTech Business. Sir, retail sales are registering downward trend. How do you propose to increase the sales in the festival times as well as after that? And how do you incentivize the dealerships?
So look, we all know that CAGR, cumulated annual growth in India, is at 5%, whether it is a 5-year base or a 10-year base. Of course, after COVID, because of the pent-up demand, we saw very high growth of 22%, and then again 8% plus last year. So some kind of ups and downs will always happen. In any case, if you see, I have also spent more than 3 decades in the Indian auto industry. June, July, August, September are, because there is no season, there are heat waves, there are floods, etc. So they're always slow. Now we are into the festival season. After a long time, in 1 month, we have Navratri, Dashera, also the Diwali as well. So we believe the market is picking up. So we are not really worried about these short-term, aberrations which will come. And we have very strong strategies in place. Last month, we introduced the Alcazar facelift, which is receiving a great response. About 2 months back, we introduced a dual-cylinder CNG in the Exter and Nios. Again, it is receiving some very, very great response. We have introduced more sunroof variants in Venue. So we keep on making little innovations. We keep on having those kind of a strong marketing connect. And we believe very, very strongly in the Indian auto market. So I think things are going to be normal. And we are already seeing a good traction in the festival season in the first 7 days. Thank you.
Hello. Hi, this is Satviki, Bloomberg News. My question is that your market share in India has been under threat from local rivals Tata Motors and Mahindra over the past year or so. How do you plan on combating this, both on the production side, on the dealership side, if you could give some insights?
So if you see, for the past 26 years in India, competition has always been very strong. Hyundai has always believed in following a quality of growth approach. You see, we are one OEM who has consistently maintained the number 2 position in the market. And not only have we grown in volume, we have had a solid market share. We had a solid number 2 position. And of course, backed by very strong profitability. As you saw in our presentation, the EBITDA margin of 13% plus, which compares very well with the peers or in the global, even with the global peers as well. So going forward, of course, as you know, that from a capacity point of view, a new plant in Pune is coming up, which will increase our capacity from currently 824,000 to almost close to 1.1 million, which is 30% addition in capacity by 28. So you can see that in the next 3 to 4 years, almost 30% capacity addition is happening, which will give us a lot of headroom both in domestic and exports to increase our volumes as well as market share. Then you would have seen that the Creta EV, which is a high volume EV market segment, is being introduced, which will help us to get market share in the EV segment as well. And of course, we'll continue to pursue the strategies of premiumization, of introducing technologies. Like I told you, ADAS was introduced. Going forward, we are looking with interest at software-defined vehicles, infotainment, all those things, so that we can continuously grow. But the important thing is quality of growth while keeping track of volumes and market share. So we want to have that balanced approach to growth. Thank you.
Hi, I'm Shrishti from Money Control. I wanted to ask, currently your share of SUVs is around 70%. So going ahead, do you see this share increasing, or, do you see other sedans or, hatchbacks, the share of that increasing?
Look, when we introduced the Creta in 2015, SUVs used to contribute only 13% to the market. But because we had very strong experience in the global markets, HMC had a very strong experience. So we were able to really identify that, yes, there could be a huge potential in the Indian market for SUVs. And you can see that how SUV segment has really grown. Today, if you see, say, January to September, our SUV contribution is 68%. It has gone up from 60% last year. Of course, industry is at about 50 to 52%. So we see still some upside to the SUVs. We introduced the Exter. We received some great response. Last month, we introduced the Alcazar facelift. I told you about some of the variants which we introduced in the Venue. At the same time, we are a full range manufacturer. We are not only an SUV maker. You can see in sedans, we have Verna, which is very strong. We have Aura, which is very strong. In the hatch segment, we have Nios, we have i20. So we are a full range manufacturer because India is a very big market. And also when you are full range, it allows you to have different kind of powertrains also. For example, at the entry level, we offer the customers petrol and CNG. Now that's very, very important, because it helps us to really address that segment of the customer who is very price sensitive. In the SUV segment, we offer petrol and diesel to the customer because that customer wants that kind of an initial torque. In the Verna segment, we offer petrol and turbo to the customer. And of course, we have the EVs. So my point is that in a country as big as India, to have different kind of technologies really helps you to grow sustainably. Thank you.
Sir Dhwani from Reuters News India. What will the IPO proceeds will be used for, and how much of it will be pumped back in India?
네, IPO 자금은 어떻게 사용될지가 궁금하고요. 그리고 인도 법인으로 다시 돌아와서 쓰이게 될지도 궁금합니다.
I would say that regarding the proceeds from this IPO, HMC will decide the details. However, on a broader level, the HMC will invest aggressively in the new products, future advanced technology, and R&D capabilities for Hyundai Motor India Limited. Yeah, thank you.
Hello, I'm Sundar from Business Standard. A few questions. Why there is no fresh issue in this IPO, fresh issue portion in this IPO? And secondly, when are you planning to bring down your stake to 75%, which is required as per the minimum public shareholding norms in India? And lastly, what is the reason for this IPO? The popular narrative is that you are getting a better valuation. Is that the real reason, or is there more to it?
세 가지 질문 드리겠습니다. 첫 번째는 이번에 IPO 하시는 데 있어서 신주 발행이 없으신 이유가 궁금하고요. 두 번째는 75%까지 그 지분을 낮추게 되는 모사의 이유, 그 놈이 무엇인지 궁금하고, 세 번째로는 IPO를 하시는 진정한 이유가 무엇인지도 궁금합니다.
I will take it the second question first. India is one of the most exciting auto market in the world, and HMI has been performing well for last 26 years, and currently is the second largest passenger vehicle OEM in India. So we believe that now is the right time for us to take a step forward to further Indianize our operations and become a home brand, a more trusted brand in India. IPO will ensure that HMI is even more dedicated to success in India. And we continue to pursue the global standards and practices in terms of governance. Additionally, IPO will provide opportunities for local and global investors to take part in our growth story. Yeah, thank you.
Hello. Hi, this is Ashok from the Hindu. So it's kind of an extension of your of the question about segments. We saw your portfolio that is lined up and it's mostly EV. Now, with the rural demands, it's coming back, and inflation is comfortable levels, and we're also looking at mostly a rate cut in the horizon. Are you looking at any low-cost segment, because most of your sales seems to be coming from premium?
So, look, if you see, we have been in India for 26 plus years, and we are where the customer is. Yes, rural is becoming more and more important. In fact, our rural penetration is now at the highest ever in the history of Hyundai. At the same time, I like to break this myth that rural customers want, small cars or hatches. Let me share with you, for the January to September period, our SUV contribution in rural is equal to SUV contribution in urban. So even the rural customers, because of the great infrastructure which is being made, and also because of the communication, because of the knowledge, because of the aspirations, rising incomes, even they don't want to compromise on the car, on the safety, on the features, and we are seeing that SUV penetration in rural is also continuously going up. Regarding cars, small cars or other cars, frankly, like I said, we study the market very, very closely, and we are there in every segment today. In fact, last year you would have seen that we had a facelift of the Nios, we had a facelift of the i20 as well. So we keep on doing innovations. We introduced the CNG, then we introduced the dual cylinder CNG in the Nios. So we believe that in a market like India, you need to be present in every segment, and we will continue to look for any opportunities that exist in any segment, whether it is hatch, sedan or SUV. At the same time, we must see that what is it the customer wants. I think that is very, very critical. And at this point of time, it seems that the preference is higher for SUVs, and that is why the focus is more on SUVs. Thank you.
Tushar?
This is Rajesh Mascarenhas from the Economic Times. This question is related to valuation. HMI contribute around 6 to 7% of HMC top line or bottom line, if I'm not mistaken. But HMC is valued at 44 billion today, and you are selling shares at around 19 billion, which is 43% of HMC. On what parameters or what basis you are valuing this HMI Indian company?
Yes, the bankers will respond to that.
Yeah, maybe I can start. I think we've seen many multinationals having their subsidiaries in India, where the valuations are very different from their parent companies. And that is because of the inherent growth and the strength of the Indian markets. Of course, the consumption story in India is very different. The penetration of the auto space is also very different in India. So with all of that growth, the markets have or give a better multiple than the global parents or peers. Accordingly, based on the investor feedback, the bankers have recommended this valuation, where we got good interest from the investors, potential investors and shareholders for this IPO.
Last two questions, please. In the interest of time, we'll have to cut short. Yeah.
Tushar from NTV Profit. You are launching a mass market EV in the fourth quarter of FY25. We have seen stringent regulation against diesel powertrains as well. So, against that backdrop, how do you see your powertrain mix evolving in the future? Do you think alternate powertrains like EVs, CNG, and can you also comment on the fact if will and hybrid version also come in? So how do you see this powertrain mix evolving in the future? Will petrol come down to about 50% and rest will be, is that something that you're aiming at, alternate powertrains contributing about 50%? Thank you.
Yes, I will say that India is the early stage of the electrification. We believe the Indian EV market is expected to grow strongly by 2030, led by the government's strong initiative and many OEMs, the EV focuses. The HMI has the access to the HMC's global EV and battery technologies. So we are developing an EV ecosystem in India. We are planning to launch the 4 EV model across the mass and the premium segment, including our Creta EV Q4 this financial year. Also, we are localized supply chain, like battery pack, driver train, and the battery cell, etc. Also, we are investing the EV charging infrastructure as well. In terms of hybrid, since 1998, HMI has always been ahead of the curve in terms of the new technology to meet the market demand and the customers' preferences. HMI has access to various HMC's powertrain technology like petrol, diesel, CNG, and hybrid, and the plug-in hybrid, even hydrogen vehicles. So we are well positioned to launch a new model with this powertrain based on the customer's demand scenario. I hope I answered your question.
This is Ben from Indian Express. You haven't answered the question when you will dilute the mandatory 25%.
So the SEBI guidelines give a window for the minimum public shareholding to be achieved by the sponsors. We will comply with the guidelines, and of course, between 3 to 5 years, the minimum public shareholding will be met.
Yeah. Last question.
Thank you. The question is regarding royalty. As of 23 FY, it was 3.5%. What was that number for FY 24? And secondly, what guidance can you give with regards to royalty? In terms of, is it going to go up? Is it going to go down? And more importantly, is it paid in rupees or in won?
로열티 관련해서 질문드리겠습니다. 피스컬 이어 2023년은 3.5%였고요. 2024년에는 몇 %인지 말씀 부탁드리고, 향후에 이 지급률 변화에 대해서 가이던스를 주실 수 있으실까요? 오를 가능성이 있다라든지 아니면 하향될 전망이 있다라든지 궁금하고, 지급이 되는 경우에 그 통화는 루피화로 지급이 되는지 말씀 부탁드리겠습니다.
Thank you. Regarding our royalty, actually you are right. Our royalty agreement with our HMC parent company is 3.5% of passenger vehicle sales revenue. Previous our royalty agreement was model-wise, consistent of lump sum royalty plus running royalty. But we changed from the 1st of April this year. You know, the last year our royalty against our sales approximately 2.8% to a little bit, around 2.8% to 3%. But, the renewed royalty 3.5% gap is less than 1%. But we can offset our royalty increase through the model mix and the volume increase, things like that. Going forward, our royalty ratio will be maintained the same level unless there is a significant change of OECD guideline or global transfer pricing issue.
Thank you. Now I would like to invite Mr. Naveen Wadhwani, Managing Director, Head of India Investment Banking, JP Morgan India Private Limited, to make the closing remarks.
Ladies and gentlemen, thank you for joining us today for this very important event. I would like to begin with extending a big thank you to the management team of HMC and HMI, whom we have worked extensively over the last 9-12 months to get to this stage. So thank you, management of HMC and HMI. It's a real pleasure and honor for JP Morgan to be a partner in this important milestone that HMI is getting into as part of its growth journey. HMI is truly a differentiated business. It's truly a differentiated company. And why I'm saying this? HMC's global parentage, whether it's technology support, R&D support, global manufacturing capabilities, HMI's deep understanding of the Indian consumer and in the Indian market. Hyundai is a household name. It's known to everybody. in this 26 plus years, Hyundai has grown, evolved, along with the India growth story. So it's part of the India growth story as we go along. Hyundai, DNA is profitable growth, calibrated expansion, high degree of financial discipline, which is all getting reflected in their financial and operating performance and the operating and financial matrix. Further, I would add that Hyundai in India is built for perpetuity. This IPO is an important event and decision of HMC to make HMI part of the India ecosystem and allow Indian stakeholders to own and be part of this growth journey. To reiterate, the IPO issue opens on Tuesday, October 15th, closes on Thursday, October 17th. Anchor book will open on Monday, October 14th. The price band has been set at rupees 1865 to rupees 1960 per share. On behalf of HMC, HMI and all the BRLMs, thank you once again for joining this event. Thank you.